So, what happens when a crypto project ships some of its biggest, most exciting news ever, and the market just kind of shrugs? Well, that's the really strange story playing out with Cardano right now. You've got a project that is just hitting one milestone after another, but its price? It seems to be telling a completely different and much less exciting story. So, what is really going on here? Okay, first, let's just look at the headlines because they are absolutely massive. Just a few days ago, the CME Group, that's the world's leading derivatives marketplace, officially launched regulated futures for Cardano. This is huge. It puts ADA in this really elite club with Bitcoin and Ether, basically opening the door for the big, serious institutional players to get involved. And then came this bombshell, a partnership with Layer Zero. For years, one of the biggest knocks on Cardano has been its isolation, that it's kind of its own little island. Well, this integration is a total game changer. It allows Cardano to connect and actually talk to over 50 other blockchains, including the heavy hitters like Ethereum and Solana. And if that wasn't enough, founder Charles Hoskinson just went and confirmed a launch date for midnight. That's the long-awaited, privacy-focused partner chain. It's now set to go live in the final week of March 2026, and it promises to bring a whole new layer of data protection and confidential smart contracts to the Cardano ecosystem. Okay, so let's really dive into this, because when you look at it on paper, these developments are building an incredibly strong case for Cardano's future. And we're not talking about hype here. We're talking about real, fundamental, structural upgrades to the entire network.
That CME Group launch, it's so much more than just a headline. It's a massive signal. As Giovanni Avicioso from CME points out here, this isn't just happening in a vacuum. It reflects real demand from their clients. It provides professional, regulated tools for institutions to manage ADA, whether they want to invest or even hedge their risk. It's a huge stamp of legitimacy.
And that Layer Zero integration, it tackles a core challenge head-on. You see, interoperability is kind of the holy grail for blockchains, getting them all to talk to each other. By connecting to dozens of other networks, Cardano is finally breaking out of its silo. And this isn't just about sending tokens back and forth, it's about unlocking liquidity and new uses from the entire crypto world. Now, what's really interesting here is the sheer intensity of the work happening behind the scenes. This number you see, 811, that represents the number of code commits pushed to Cardano's public repositories in a single week in early February. It's just a powerful indicator that the developers are working relentlessly. The building has absolutely not stopped. So the crucial point is that there's a clear plan for what's coming next. The roadmap for 2026 is absolutely packed with critical milestones. We're talking about the launch of the USDCX stablecoin to bring in vital liquidity, the Midnight mainnet going live for privacy, the huge Ouroboros Laos upgrade to massively boost scalability, and key integrations like the Pyth Oracle for reliable data. Which, of course, brings us to the central puzzle here. With all of this foundational progress, a clear roadmap, institutional buy-in, you would expect the market to be absolutely ecstatic. But it's not. So what gives? All right, let's flip the coin and look at the other side of the story because it paints a completely different picture. While the developers are busy building this incredible cathedral, it seems like the traders are all looking somewhere else. And this slide just illustrates the core problem perfectly. On the left side, you have all that amazing fundamental progress we just talked about. But on the right, the market signals are telling a story of serious weakness. The price is down over 15% in a week, it's trading near recent lows, and the on-chain activity is just lagging behind. It's like two completely competing narratives happening at the same time. Let's dig into a key on-chain metric for a second. This is called the price DA divergence. Now, in simple terms, this compares the price of ADA to the number of daily active addresses on the network, basically how many people are actually using it. Those persistent red bars show that network participation just isn't growing fast enough to support the price, which suggests some weak underlying demand. And you can see this market skepticism reflected in what the analysts are forecasting. I mean, despite all the incredible news, the price targets for the rest of 2026 are overwhelmingly, flat. The average case puts ADA at just 27 cents, and even the bull case barely scrapes 29 cents. There's just very little upside expected anytime soon. So how is the market reading all this? Well, some analysts like Wolfster Crypto here, they don't see it as a sign of failure, but maybe as a long-term buying opportunity. The idea is that ADA is in an accumulation range, a zone where patient investors can get in. but it's clearly not seen as being on the verge of some massive breakout. So, how do we reconcile these two completely different stories? You have these powerhouse fundamentals on one hand and a totally unimpressed market on the other. Well, there are a few key explanations for this disconnect. First, let's go back to those new institutional futures. They might not be for betting on a price increase. Some analysts think they're actually being used to hedge, to protect against downside risk. Second, there's the simple reality of a time lag. It often takes a long time between shipping cool new technology and seeing tons of people actually adopt it. A third possibility is that the market is just making a clear distinction between long-term fundamental value and short-term price action. And finally, as founder Charles Hoskinson admitted himself, the broader crypto market sentiment right now is, in his own words, at an all-time low. All of this brings us to the final and most crucial takeaway for Cardano as it tries to navigate the rest of 2026. And really, this is the question that defines Cardano's entire path forward. The project is undeniably building a powerful, technically impressive foundation. But, as we all know, in the world of crypto, fundamentals don't always translate to price, at least not right away. The challenge now for Cardano is to prove that its beautiful cathedral isn't just an architectural marvel, but a place that people actually want to be.